This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Slow motion rally. The three major stock indexes kicked the week off with a record close. And this modest melt-up comes during the calmest market in 75 years.
Apartment mega merger. Why today's $4 billion deal could be a sign that landlords are worried the rental market is starting to slow.
Taking off after a summer of long lines and delays, air travelers may finally have something to smile about this fall. Those stories and more tonight on Nightly Business Report for Monday, August 15th.
Good evening, everyone, and welcome. Glad you could join us. Well, call it a hat trick, call it a trifecta, a triple, call it whatever you want. But whatever you do call it, make sure you describe today as one of those rarest of stock market sessions. For only the second time in more than 15 years, the other was just last week, all three major market barometers finished the day at record highs. They set intraday highs as well. Now, who really knows why stocks rise or fall on any given day? As good an explanation as any today is that oil prices were up. In fact, West Texas crude gained almost 3%. It finished at a one-month high of $45.35 a barrel. Commodity-linked shares got a boost from oil's rise, and oil's gain, in turn, was fueled by last week's signals that major producers may cap production. Here are the final stock market numbers for a low-volume but record-setting Monday in August. The Dow rose to 60 to finish at 18,636. The Nasdaq was up 0.6% or 29 points, outperforming the Dow and the S&P to close the day at 5262, and the S&P 500 jumped 6 to 2190.
This melt-up has been slow and steady. Some might even call it boring. But as Mike Santoli tells us, some want to know if this is the calm before another market storm.
The stock market's recent move to record highs has been unusually subdued. By some measures, the past month has seen the calmest market in 75 years. That's based on the uncommonly narrow trading range. In all but 2 days in the past 4 weeks, the S&P 500 index has gained or lost less than 0.5%. And this quiet pattern is not simply a matter of late summer doldrums. August, in fact, often sees erratic trading and has been among the weakest months for stocks in recent years. So what explains the surprising lack of volatility now? Several forces have turned in the market's favor at once. Traders saw the brief market sell-off after the vote by the UK in June to leave the European Union as overdone and picked up beaten down stocks. Around the same time, U.S. economic data brightened considerably and companies began surpassing profit forecasts, even as investors gained confidence that the Federal Reserve would not lift interest rates again soon. Yields on government bonds, meantime, have remained near record lows, helping to support all financial markets. The resulting slow-motion rally has confounded many forecasts of continued unsettled markets following the sharp wintertime downturn. The question now is whether this lull is simply the calm before another market storm. The odds do seem to favor some pickup in volatility into September, which even in strong markets has often been a time for Wall Street dips and dives. And incoming data could easily upset the tight consensus about future Fed moves or the strength of the U.S. consumer. But in itself, history says a low-drama market is not necessarily something to be feared. Perhaps investors should just try to enjoy the quiet while it lasts. For Nightly Business Report, I'm Mike Santoli at the New York Stock Exchange.
With interest rates low and likely to stay that way, a Federal Reserve official suggests that the central bank should consider raising its inflation target. John Williams says the current target does not work in a low interest rate environment because there's not enough room to cut rates in the event of an economic downturn. A higher target would give the Fed more room to maneuver, he thinks. The head of the San Francisco Fed also suggested that the Fed could simply target nominal economic output, or that government spending programs should kick in automatically during downturns.
Home builders are feeling better about the economy. According to the National Association of Home Builders, sentiment improved this month, especially when it comes to current and future sales. The housing market is being supported by those historically low mortgage rates, an increase in household formation, and a solid labor market.
An apartment mega merger to tell you about. Mid-American Apartment Communities will buy Post properties for about $4 billion. The deal sent shares of Post higher by 9%, Mid-American lower by more than 4%. The combination creates the largest publicly traded apartment real estate investment trust by number of units. But is it a sign that landlords are starting to scramble in a slowing market? Diana Olick takes a look.
The assets are highly complementary, and that, say the CEOs of MAA and Post Properties, is why merging the two apartment companies makes sense. MAA will buy Post for roughly $4 billion, resulting in a combined portfolio of about 105,000 apartments in 317 properties. That will make MAA the largest apartment REIT in the nation.
When you have an entity that large, you can really get economies of scale to reduce a whole bunch of operating expenses.
The new MAA will have its strongest foothold in the Sun Belt, where rental demand is still comparatively strong. MAA Chairman and CEO H. Eric Bolton Jr. said in a release, the combined company will capture a broader market and submarket footprint with improved rental price point diversification. The merger comes at something of a turning point in the apartment market. Rents and occupancy are still strong, but starting to slip, especially in major metropolitan areas like here in D.C., where an abundance of luxury supply is hitting the market.
As you start to have more supply, it definitely puts up pressures on rents. So again, we do think you end up seeing fundamentals slowing going forward, which again, I think makes this merger even more critical now that they can actually reduce operating expenses if top line will not be growing as fast as it was over the past 12 to 24 months.
The costs of things like maintenance, advertising, and insurance can be combined and cut, meaning better returns for investors. For Nightly Business Report, I'm Diana Olick in Washington.
It is a big week for retail earnings. Over the next few days, we'll hear from companies like Target, Home Depot, The Gap, Foot Locker, and the world's largest retailer, Walmart. These reports follow the better-than-expected results last week from Macy's, Kohl's, and Nordstrom. And as Courtney Reagan reports, many are now trying to figure out if that struggling sector is really starting to turn.
It's safe to say retail has been a mixed bag over the last year, and the rough patches in the sector, like department stores, have been struggling. But recent retail earnings show signs of healthy consumer spending in a different direction, away from spending on homes and automobiles and possibly back to apparel. The big box retailers, including the biggest box, will report this week, along with many others, and analysts are warning investors not to abandon their patience just yet. Investors certainly care about each quarter, but when it comes to Walmart, the strategy has been geared towards winning in the long run, especially as consumers shift to more online purchasing. Details on Walmart's acquisition of e-commerce startup Jet.com will be particularly important this week, but Wall Street of late is putting more emphasis on long-term results.
I think that Doug McMillon is doing a great job here in trying to position the company for the next 50 years rather than just the next quarter. And so I think he's on the right track. Too early to tell on Jet.com in terms of how that'll turn out. I think in a few years' time, we may look back and say it was brilliant.
When it comes to the consumer, there's no doubt spending is strong. Walmart CEO Doug McMillon said last week on CNBC he sees encouraging signs from shoppers and that low fuel prices do help. Similarly, Macy's CEO Terry Lundgren agrees, but saying consumers have been spending only in concentrated categories that benefit Home Depot and Lowe's. We'll find out this week whether that continues or if consumer dollars are shifting once again. Department store results were better than expected, though on low expectations. Clothing spending has been weak, so even a little positive news got a lot of attention. And if early back-to-school clothing spending has been good for Kohl's and denim is good for Macy's, maybe American Eagle, Gap, and Urban Outfitters will see similar results. It may be too early to tell if retail is seeing a full-fledged resurgence, but at least for now, there are signs of renewed life. For a Nightly Business Report, I'm Courtney Reagan.
We turn now to the devastating floods in Louisiana. Tens of thousands of residents have been rescued from their homes. About 10,000 are in shelters until the waters recede. At least 5 deaths are linked to the flooding. The governor declared a state of emergency over the weekend and described the floods as unprecedented and historic. The hardest hit areas have been around Baton Rouge, where more than 20 inches of rain fell over the weekend and where more is expected.
And from floods to heat that's blanketing the East Coast and much of the country and bringing high temperatures to some of the country's biggest cities. And with the heat comes high demand for electricity, which is testing our nation's power grid. Jeff Daigle is the chief electrical engineer for Pacific Northwest National Laboratory. He leads research projects for the U.S. Department of Energy and oversees new technologies that improve the power grids. Thanks for joining us. It's a pleasure to have you here, Jeff.
Thanks, Sue. Good evening.
So tell me how the power grid is now. Give me the status of it as compared with, say, a few years ago when we did have rolling outages when the weather would get this hot.
Yeah, certainly there's two aspects of grid reliability that we pay attention to. One is what we call availability, and that's the availability of resources for the supply to meet the available demand. And this year, the grid is actually doing pretty well in that area. The grid operators pay close attention to forecasts, demand forecasts, and then they schedule the supply to meet that demand.
So, Jeff, there's been a lot of talk in the political campaigns about improving the nation's infrastructure. How would you rate the electric infrastructure in this country if you had to grade it A to F? And what needs to be done to bring it up to a higher grade if it's not already there?
Well, we're certainly working very hard on that. The U.S. Department of Energy has recently unveiled a grid modernization initiative. The Secretary of Energy announced that in January with over $200 million of funding to a consortium of national laboratories. So we're going to be working on enhancing the resilience, reliability, and security of the electric power grid. I lead the area in system operations and control, and so I'll be focusing research in that area to improve the ability of the grid operators to operate and manage that power grid.
How would you grade it today if you had to, Professor?
We don't really necessarily give it a grade. I know the civil engineers give different infrastructures grades. Mm-hmm. I would say that it's in pretty good shape, but we're always looking for areas of improvement.
And what about security? Because, of course, the world is a dangerous place, and the electrical grid is one area that might be susceptible to security breaches. How do you think the grid is in terms of that?
Absolutely. That's something that is of high concern to grid operators and the government alike. There have been some incidents in the past that have raised awareness of this issue. There's some new government and industry standards that the utility operators are needing to follow to enhance the physical security, as well as cybersecurity initiatives that we've been focused on for a number of years. This is a concern that has been with us for a while. I think the threat is hard to gauge, so our strategy is to be prepared and try to accommodate those types of threats so that we can manage them if they occur.
All right, we'll let you go, Jeff. Thank you so much for joining us. Jeff Daigle with Pacific Northwest National Laboratory.
And still ahead, why Google's fiber may be slowing down the rollout of its high-speed internet business.
Google's parent, Alphabet, is reportedly rethinking its high-speed internet business. The fiber lines are proving very expensive and very time-consuming to install. And as Aditi Roy reports, the company may now be considering other ways to deliver broadband access.
Google Fiber has been welcomed by cities like Charlotte as a critical tool for getting residents and businesses on literally the fast track to cutting-edge technology. But now it may be facing roadblocks. The Wall Street Journal reports that Google is rethinking its high-speed internet business because it's too costly and time-consuming. Now in 6 cities nationwide, Alphabet's high-speed internet arm promises connection speeds up to 100 times faster than current basic broadband technology. But launching the service has required hundreds of millions of dollars to lay fiber optic cables in its subscriber cities. Now Google is reportedly trying to cut costs by leasing existing fiber, asking cities to build networks and in some cases abandon cables altogether and use wireless technology.
Google getting into fiber is a huge step out of their core advertising business, and that's why they're going at it slow, and that's why it's costing more money for them to do it. And when you think about laying fiber, this is really dirty business, figuratively and literally. You're rolling trucks, you're digging up yards, you're posting lines through on telephone poles. This is something that you have a storm and you can have outages. The amount of customer calls is much dramatically different than getting calls from advertisers.
Google Fiber launched 6 years ago and is in just 6 U.S. cities, but has plans to expand to as many as 16 new locations. Palo Alto is one of those cities, but its chief information officer recently learned that those plans have been delayed. Jonathan Reichenthal tells CNBC that Google Fiber informed the city that efforts would be delayed by 6 months. In a statement, a Google spokesperson tells CNBC, "We're continuing to work with city leaders to explore the possibility of bringing Google Fiber to many cities. This means deploying the latest technologies in alignment with our product roadmap while understanding local considerations, which takes time." Fiber is part of Alphabet's Other Bets unit, which has drawn attention recently with the departure of several senior-level executives from Google Ventures, Nest, and the company's self-driving unit. While Other Bets still makes up a small percentage of Alphabet's total revenue, just $185 million last quarter, with an operating loss of $859 million, analysts say that the fiber business is still a smart investment.
I think that this is a brilliant move by Google to talk more about fiber and to really scare and intimidate the existing service providers to providing better and faster service, cheaper service to consumers, because it's been proven since the beginning of the internet that when internet access improves, whether it's speed or cost declines, that Google wins. And so give credit to Google for playing this game wisely.
On Alphabet's most recent earnings call, Google CFO Roop Porat says the company continues to see fiber as a huge market opportunity and will continue to work closely with cities, exploring both fiber and wireless. For a Nightly Business Report, I'm Aditi Roy, San Francisco.
The Department of Justice has reportedly found evidence of possible criminal wrongdoing at Volkswagen. According to the Wall Street Journal, officials are negotiating a settlement with the automaker over its diesel emissions scandal. That settlement is expected to result in charges and financial penalties. The report says that prosecutors have not yet settled on which criminal charges they might bring against the automaker.
Tesla has restored the word autopilot to its website in China. The company said the temporary removal of that term was a mistake. Tesla did say it revised some language on its site to make it clear to drivers that autopilot was a driver assist system and not a self-driving system. A Beijing driver recently crashed his car in autopilot mode, and that accident, fortunately, did not result in any injuries.
A number of other Chinese companies are scrambling to compete with Tesla. China now the world's #1 auto market, and there's a big push to make it the #1 for electric vehicles as well. Eunice Yoon reports tonight from Beijing.
You probably haven't heard of CH Auto, and for good reason. From its headquarters in Beijing, the company has designed and produced cars for other Chinese car makers until it made this, the Qiantu K50, China's first homegrown battery-powered roadster and competitor to Tesla's Model S. The K50 is the brainchild of founder Lu Chun. An engineer by trade, Lu worked at Jeep in China. Then he created his own brand, Qiantu, which means the future in Chinese.
China is already the biggest auto market in the world, and without a doubt it will be the biggest market for electric vehicles. We think it's very good that in such a fast-growing market, the Chinese government has provided guidance and incentives through its policies.
Beijing is targeting new energy cars for special state support. It wants locally made hybrids and electric cars to expand tenfold to 3 million by 2025 to reduce pollution and help China become a technology leader. Several IT and car companies, including CH Auto, are rushing in to compete.
You can see here our engineering prototype.
What's your competitive edge over Tesla?
The exterior of this car is made of carbon fiber materials, while the interior is mostly aluminum alloy. This structure is completely different from Tesla and other EVs.
The lightweight carbon body and aluminum frame are meant to improve performance.
One of the challenges that the government faces is that it has to roll out all the infrastructure to make sure that energy-efficient cars are appealing to the public. The government has already set up charging stations like this one in the big cities like Beijing, but it has a long way to go.
Even so, CH Auto is investing more than $300 million into a new factory to produce the K50, which Lu says could price higher than Tesla when the Chinese car debuts in 2017.
People often think made-in-China cars sell at the low end, which leaves an impression that Chinese cars are cheap and poor quality. We want to change that impression.
Along with the future of China's car industry.
For Nightly Business Report, I'm Eunice Yoon in Beijing.
Twitter and Apple may be close to striking a deal, and that's where we begin tonight's market focus. According to the New York Times, Twitter is in talks with Apple to launch its app on Apple TV. That app would allow viewers to stream National Football League games. Twitter recently signed a $10 million deal with the NFL to stream 10 Thursday night games during the 2016 season. Shares of Twitter soared more than 6% to 2086. Shares of Apple were up 1% to 109.51. Computer company IBM said it has signed a 7-year deal with business software maker Workday. Workday is expected to tap into IBM's cloud computing services to create new programs. Shares of IBM fell 7 cents to 161.88. Workday shares rose fractionally to 83.65.
Profit nearly tripled at Cisco. The food distributor for restaurants and schools said lower food costs helped drive profit as well as sales higher in the latest quarter. Separately, after the bell on Friday, the hedge fund Trian Fund Management said it ups its stake in that company. Shares finished the day down a tick to 52.18. Shares of Time Inc., meanwhile, surged today after a regulatory filing revealed that hedge fund Jana Partners bought 5 million shares of the magazine publisher. Time Inc. up more than 5.5% to $14.42. And AIG will part ways with its mortgage insurance business. The insurance giant will sell the division to Arch Capital for about $3.5 billion. The deal, which is not guaranteed to close, could nevertheless be finalized this week. AIG shares rose only marginally on the news to 59.22.
A hotel operator that runs a number of popular brands says its payment processing system has been breached. The HEI Hotels and Resorts, which includes Hyatt, Sheraton, Marriott, and Westin, said the hack may have impacted 20 hotels in 10 states and the District of Columbia. Malware was installed that can capture credit card information at the point of purchase.
Here's something that will get the attention of travelers. Airfares this fall are expected to fall a lot. That's according to researchers who track how much it costs to fly. And while this is good news if you're booking a flight, it's not great news if you own airline stocks. Phil LeBeau has more.
If you're packing your bags for a trip this fall, you might have a little extra money to spend when you take off. That's the prediction of the travel website Hopper, which expects domestic fares to drop more than 8% through October. It's the continuation of a trend the industry has seen over the last 3 years, as domestic airfares have steadily declined, hitting an average of $232 for a round-trip ticket in July. Why are fares falling? Partially because airlines have added more seats on more routes, so there's plenty of capacity. And airlines will drop ticket prices to keep those seats filled, especially in the fall, which is traditionally one of the slowest seasons for travel. Another factor is the drop in jet fuel prices. That allows carriers to lower fares but still make a profit. But this trend is not good for airlines. Passenger revenue per available seat mile, a primary factor investors use to gauge the growth of airlines, has been down for most of the last year. As a result, investors have not been excited about airline stocks, and they've lagged the market overall. While everyone enjoys a good fare sale, not every flight will feature lower ticket prices. If you're booking a trip to a popular destination at a popular time, say Labor Day weekend, you may not see much of a discount. For Nightly Business Report, I'm Phil LeBeau, Chicago.
Oh, Phil's got that one right.
Yep.
To find out how to find a cheap flight this fall, head to our website, nbr.com.
Coming up, the maker of the world's most expensive watches has reached a new extreme. And finally tonight, what happens when you combine the work of a graffiti artist and a watchmaker? The answer is very, very expensive. Robert Frank has the story of one of the world's priciest timepieces.
Richard Mille makes the most expensive watches in the world with an average sale price of $185,000. Yet Mille's newest model marks a new extreme, a piece of graffiti for your wrist for $800,000. It's called the RM6801, a collaboration with French street artist Cyril Congo. Instead of tagging trains and walls with spray cans, Congo used tiny airbrushes to color each part of the tourbillon watch.
He goes around the streets, he paints vans, he paints bridges.
It trains.
Big illegal art.
Exactly.
Mille is making only 30 of the watches, and they're already sold out. While the luxury watch industry is slowing, Mille can't keep up with demand.
We cannot satisfy everybody. This is our life. The watch business is very much turned into volume. People are obsessed by volume. I'm not.
For Nightly Business Report, I'm Robert Frank.
And Richard Mille's watches are known as the billionaire's secret handshake, since the brand is known mainly among the super rich. And while sales of Swiss luxury watches fell 16% in June, continuing a long slide, Richard Mille is set to have another record-breaking year.
I've never had that handshake and never will.
Nope.
Before we go, here's another look at the record close on Wall Street. The Dow up 60 to finish at 18,636. NASDAQ higher by 29, outperforming the Dow and the S&P to close the day at 52.62. And the S&P 500 jumped 6.
I just want a classic watch.
Simple watch.
Yeah.
Simple is good.
Simple's always good. That's Nightly Business Report for tonight. I'm Sue Herrera. Thanks for joining us.
I'm Tyler Matheson. Thanks from me as well. Have a great evening, everybody. We'll see you back here Tuesday.